Welcome back to another episode of Primary Source China Investment. Peng.guo and I are happy to be here. Please hit the subscribe button. Please let us know if we're missing any topics. And today we're looking at show R. Already we're at show R. So we're very excited to be here. And this week we're talking two concepts again. First is the 100th anniversary of the China's Communist Party. And the second is year to date, since we're at the halfway part of 2021, what has the market done? So let's get into it on policy. As America celebrates its 245th birthday, the Communist Party celebrated its 100th anniversary, and later this year, it will celebrate its 72nd year in power. Like all political speeches, it's best to try to sift through the rhetoric and try to get at the policy. So was there any new policy in Xi Jinping's speech? The short answer is no. Some in the Western press got very anxious over some translated Chengyu or idiom, and of course there was some mention of Taiwan. But anybody who's been following Xi Jinping since 2012, none of this was new information. Perhaps it's best to look at the speech itself and see what words were used. And right up top, the most important phrase or word or term was the party. It actually appeared 109 times in the speech, which was more than the total of all other terms combined. So if there's any doubt what's on the mind of the party, it's the party.
It's a good time to talk about this. Think about the 100 years. It's really like a long time. It's really starting from the 13 people. So 13 people. Now what they are doing, they try to save China and looks around. They have no money. They have no outside support. So they just started step by step to today. From here is if we just see the current status, it's pretty hard to understand it. However, if we see the whole history, that would be much easier. Firstly, most of the people, I think especially young people, they don't understand the CCP's history. What the experience, what the lesson could be there, just a high level. So you will understand China or understand it much better. So that's the number one. Number two is I think China's value didn't get recognized overall. So that's the people get worried about that. Like Monday, Wednesday, Friday, China is threatened. Tuesday, Thursday, Saturday, China will collapse. That's pretty much all wrong. China they do contribute the value, like the historical value. For example, in 1931, the China and Japan, they already started war. China didn't surrender. So they keep doing the war and the resistance intrude of Japan. Because China didn't surrender and Japan cannot use China resources to attack the Russia. Otherwise, the World War II break it in 1931. That could be totally changed. Think about that. If Russian get the Japan and Germany attacked from both sides, the whole global system will be changed. And I think right now, China's contribution to the global economy is still not recognized because you don't know the China's value. So that's pretty much it looks like China's threatened, and most likely with that. So because China suffered a lot of the war, so right now ordinary people definitely don't support send the army to attack the other countries. So that's absolutely not acceptable for the ordinary people. So understand the history, so you will feel much better about is that really the threat or not. So that's number one. And the number two is you may or may not care about China. You may wish them collapse or not collapse, but you just see them objectively. So just evaluate their performance.
Yeah, I do think, people are aware China has 18% of the global GDP. China has been, rising economically for 40 years. I don't think anybody denies that. I think what people don't understand is the Communist Party of China has somewhat like 95 million members. And in a country of 1.4 billion people, that's pretty small. Membership is really difficult. In order to become a member, there's exams, there's background checks, you need letters of recommendation. The whole process could take 2 to 3 years. So it's not just saying, oh, I'd like to be in the Chinese Communist Party, and people say, great, welcome, we have a meeting on Tuesday. It's not like that at all. There's a long process, and it's a rigorous process. The other thing people may not understand is that the overall satisfaction of the government has been increasing for years in China. So people are happy with the government. It's no surprise. People's quality of life has been improving. Obviously, if people have jobs, schools are better, infrastructure is better, the quality of life continues to improve. And as long as the quality of life continues to improve, the government will enjoy widespread support. It's not a mystery. So as we are at the 100th year anniversary, the Communist Party is firmly in charge. There's no competing voices. There's no competing philosophies. And some would argue, well, those get all stamped out. That may be true, but the people do support the party. However, going forward, that's more interesting from our perspective, which is the investment perspective. And there are some big problems. There's a huge wealth imbalance. Growth is slowing. The party seems to want to be more and more involved in people's everyday life. And those are the kind of risks. I think the fourth risk is probably succession. Right now, Xi Jinping is 68 years old, and he's installed himself, it looks like forever. It doesn't look like there's a succession plan in place in the event of some exogenous event.
Yeah, that's definitely a good point. I think most people don't understand how to become a member and what's the process. It's not like the voter. You register and then
you put your hand
a
up. Oh,
voter.
I'd like to be in the party.
Yeah, that's right. So it's really, they really try to be the leader, and you have the good performance. You win the trust, at least by the people surrounding you. You can stand out. That one you are qualified to the member. So it's really like the leader to doing that. So leader your small team or your company, whatever place to do it. It's hard process. It's not easy. So that really means you need to get the public opinion, at least surround you, recognize you are good.
Yeah, the final thing I would like to add here is that the correct response to the party's boasting is not to deny China its success, but to look at the attribution. The Chinese people enjoy greater success when the CCP implements a light touch, or more bluntly, stops trying to micromanage the lives of ordinary people. It could be argued that when the party does less, the people actually do better. And we can see this in the initial reforms first articulated by Nobel Prize-winning economist Sir Arthur Lewis. And those policies were get people off the farm and get them into the factory. That worked amazingly well in places like Japan and Taiwan and South Korea. And Deng Xiaoping implemented those. So we need to give credit where credit is due. Those people who have moved from the farm to the factory have increased their productivity, have increased the lives of many, created a lot of wealth. And that trick is a good trick. It works. It works everywhere. And denying that is short-sighted.
China is, I think right now is good time. It's really like the milestone from history. Really, they try to get what's the experience, what are the lessons to doing that. So I think from history, the CCP is really get the support of the people. The reason is simple. They get the public opinion. They understand the pain point. They find the right solution to solve the problem, or at least relieve the problem. That's how they get the support. They will continue to doing that. If they're off this track, obviously they will suffer the consequence.
Exactly. I think the party has shown its ability to evolve. If you look at Xi Jinping's speech again, Marx came up 12 times, but Lenin came up 3 times. I think we can all agree that Marx has been dropped from the economy in China, but Lenin is the one in terms of the party leadership. So the party does evolve, and they do have to answer to the people. Otherwise, if the people are not happy, there will be consequences for government.
Yeah, that's exactly right. Yeah.
Okay. Well, we're going to leave it at that and move on to talk a little bit about what the economy, what the investment spaces look like for the first half of the year. So today on Capital Markets, we're at the halfway point for 2021, and we thought it'd be a good time to go see what worked, what didn't work, what's been happening with the market, how have returns been, and where we are in terms of the equity market, the fixed income market, maybe the FX market, and a little bit of commodities. So we're going to put a big chart up here looking at the mainland market and the Hong Kong market along with the fixed income market. And we can see it doesn't matter what your strategy is on the mainland. Year to date, you've had a lot of volatility and not a lot of return. This is a recurring theme. So year to date, it's flat with a big spike in volatility on the positive side and the negative side. And on the fixed income side, we're basically flat with about a 2% return in yield. So the low volatility and the same return is obviously, on a risk-adjusted basis, a much better place to be. Interesting thing on the renminbi US dollar is, although we've had some two-way volatility, we're also flat year to date. And we're currently, at about 647 to the dollar.
I think in China market this year is the sectors is really rotated. It's pretty quick. The overall the index like the Shanghai, Shenzhen index don't have that too much percentage. So United States is still the best performance overall.
Yeah, S&P 12% year to date.
Yeah, it's every day they get a new high. That's really awesome. But in China, it's really, I think right now it's really you need to figure out which sectors have the long-term potential growth, like the new energy, like the chips, the semiconductor. That's all have the huge gains for this year.
Are those getting
the
crowded
traditional
trades?
consumer?
Are those kind of sectors very, very popular now and maybe bid up a little bit?
That's true. So this is more like the so in China, no sector can consistently be outbid other sectors. So they always get rotated and pretty quick. Yeah, I think the most important thing for the investment still do the two things: figure out which sectors potential to grow long term, and secondly, get the profit weight to do that. If you don't know the weight, just the equal weight on the a good sector, you should get a good performance.
I completely agree. There is some momentum that happens, and momentum shifts quickly. And I know a lot of people follow the momentum. One of the things that we talked about in a previous episode was the private market. And there's an index of private fund managers, and my buddy over at Fortune Security sends that over to me. I'm going to put a chart up of that, and as I'm talking about it, I'm going to look at it as well, because the interesting thing here is this index dumps all of these funds into one index, which is probably wrong because it has all the different strategies from CTA to long short to global macro. But if you throw all those funds into one index, you see that the index underperforms the equity market. And that's really telling, because there are some funds on a monthly basis have massive returns. I'm going to put a couple of them up that outperformed in May or June. And the problem is, like stock picking, it's hard to find those managers consistently. So the manager that does great in January doesn't do great in February, doesn't do great in March, and then there's a new one in April. So you're never going to catch the great manager consistently because they have a lot of volatility within their own portfolios.
That's true. I think generally for the private fund, you need a split to the two parts. One is based on the equity manager stock selection or sector selection scale. So this is the number one. And another part of the funds is like the trading scale. So it's like the trader, they accumulate the small profit step by step. So those two bigger kind of things. For the first part is very hard because the stock, the sector keep changing, and the stock market keep changing. Even you find the good stock, you cannot be concentrated on that because of the many investment disciplines. The only successful right now is select the good stock and get the high rate. So that is very hard, and the very few managers can consistent doing that. If they really consistent, like someone very famous to invest in the multi, so they concentrate on the multi for many years, but after they cannot shift to semiconductor, new energy cars within a couple of days. So that's almost impossible. Yeah, you have to stay with that. So trading is because they accumulate a small amount. It's pretty much like the fixed income kind of the product. So they step by step. So you will see the NAV is pretty upward and stable, reduce the volatility. Those could be quite popular in China right now, especially in the downside of the market.
Yeah, you need to find those managers with a long track record of doing this and a lot of disclosure and transparency. And I think that's an area where we can get into at some point in the future, because it's not easy to get that transparency.
Yeah, from the trading perspective, I think it don't need a 10-year history to doing the trading. Pretty much, if you can consistently trade every day to make money, that's really you are in the high scale, high level.
Pretty rare.
Otherwise, yeah, you cannot consistently doing to make money to doing that like that. It's quite easy to stand out from the many funds and get the capital's inflow.
Sure. Well, we're going to leave it there this week. We'll keep broadcasting. You guys keep learning, keep watching, and we'll see you next week. Have a great 4th of July.
Thank you. Enjoy it.